Have you ever felt that panic as your position inches closer and closer to liquidation? If you're trading with leverage, you know exactly what I'm talking about. Today, I'm breaking down 5 pro tips to help you avoid getting liquidated and stay in the game, even when the market gets wild. Tip number 1: keep leverage low. I know, 10x, 20x, even 100x leverage sounds thrilling. But remember, high leverage means high risk. Think of leverage like a turbo boost on a race car, powerful but extremely dangerous if you don't control it. Using lower leverage, like 2x or 3x, gives you more room to breathe. The gains may seem smaller, but this approach keeps you from being wiped out in one trade. Tip number 2: set your stop loss, and I mean actually use it. Stop losses aren't just there to limit your losses, they're there to protect you from your own emotions. When the market goes against you, don't get tempted to move your stop loss further down, hoping for a miracle bounce. Stick to it and walk away if you have to. This habit can make the difference between a small loss and a complete liquidation. Tip number 3: know your liquidation price like the back of your hand. Before you even enter a trade, calculate where your position will be liquidated. This number isn't just for information, it's your danger zone. If it's uncomfortably close to your entry, it's a sign you may need to reduce your leverage or add more margin to create a buffer. Knowing this price helps you stay calm and in control. Tip number 4: manage your position sizes carefully. In the crypto world, going all in on one trade is like putting all your chips on a single spin of the roulette wheel. It might pay off big sometimes, but more often it leads to disaster. By keeping each trade small, you protect yourself from market surprises. Even if one position is underperforming, it won't wipe out your entire account. Your goal is to stay in the game. Tip number 5: always have a margin buffer. Adding extra margin to your position might seem unnecessary, but it's like giving yourself extra armor. In volatile markets, this margin buffer pushes your liquidation price further away, giving you more protection. Think of it as an emergency cushion. If the price swings unexpectedly, this buffer can be the difference between staying in the trade or getting liquidated. There you have it, 5 essential tips to avoid liquidation and keep your account safe. Leverage is powerful, but only if you respect it. If these tips helped you, hit that like button and subscribe for more insider trading strategies. Remember, the key isn't just winning, it's surviving. Happy trading, and I'll see you in the next video.